Good afternoon and welcome to our weekly livestock update. I'm Brownfield news anchor reporter Meghan Grebner. With us is University of Missouri Scott Brown. We're going to talk a little bit about the livestock markets and let's start first there and talk about what happened this week. Scott, good afternoon.
Good afternoon, Megan. Yes, when you look at markets this week, we can start on the hog side, and we might have had a slightly lower hog market as we look through the week, but frankly, we've been relatively flat on hog prices, and I will say if we'd looked back at early this year and said we'd be at these kinds of prices, I think most folks would have found that difficult. So continued, I would say, good news on the pork side. Cattle markets have been off a little bit this week. When you look at fed cattle prices, we've probably been down $5 to $6 off of what was a pretty strong week last week. So lower fed cattle prices, also lower on calf prices, $5 to $10, although late in the week, I think we've seen a little bit of strength in terms of feeder cattle prices. So, again, at lower cattle prices, but coming off of what was a really good week last week.
Let's talk a little bit. Cold storage numbers came out this week. Are we looking at another positive report for the livestock market?
Well, I think generally I would certainly frame a lot of things in that report as being positive. I start with the beef side of the equation for a minute. If you recognize that we're up 3% roughly on beef production so far year to date, and then look at the cold storage numbers and say, we're sitting at about 97% of a year ago when you look at both boneless and beef cuts from a stocks perspective. That's pretty good news. It tells me that demand's been strong enough to keep product moving. I think most would have probably thought we would see growing stocks of beef relative to a year ago, given that beef production's been going up. Now, I think when you change and look at pork, there's a few more things in the report that might be a little troubling. I look at bellies and say, when you look at cold storage stocks of pork bellies up 135% of a month ago, we have been growing belly stocks. Now, I will say, relative to a year ago, still slightly down, so not horrible news by any stretch. But you can see some categories on the pork side where we have a few more stocks relative to where we had at least a month ago. So growing pork stocks may be a little bit of a sign of some trouble ahead. But again, frankly, it's been amazing the movement of meat that we've seen in domestic channels as we've looked this year, and the stocks report certainly confirms that we're not growing huge numbers of stocks at this point in time.
In addition to that cold storage report, I'm always really interested and intrigued by the consumer sentiment report, which came out this week from the University of Michigan. Talk to me a little bit about what it shows and what that means for the folks that produce the meat.
Yeah, so I sometimes think we think about that report as maybe not being as critical to what we see in livestock markets, but I'll say from my standpoint, consumer demand is the most important factor we have going for us in 2016. And the good news there is that University of Michigan report showed us higher for consumer sentiment in the final May numbers that we have. It's nice to see a continued upward trend from the very low levels that we saw with the economic downturn in 2009. But boy, we need strong demand to continue, and when consumers feel better about the economy, I think they certainly spend a portion of their additional income on food, and I will say that's probably equally important when you start thinking about things like crude oil prices. We've seen crude oil prices start to move up. Now that we're sitting there at $50 or a little above a barrel in terms of crude oil prices, perhaps gasoline prices that will stay above $2.50 here before long a gallon. One has to wonder about what that does for meat demand. So getting consumer sentiment to be strong, I think, is important for overall meat demand.
And I would assume heading into this weekend and the holiday weekend, we're going to see a lot of consumer demand go up for those beef and pork and even poultry products that we're seeing at the meat case in the grocery stores.
Yeah, absolutely. I think when you look at pork cutout value, for example, again, another week where very little change relative to a week ago, only down a little less than 3% relative to a year ago. All in all, a strong cutout value for pork, and I will say I think that has a lot to do with just how much meat we're trying to move, and the amount of specials that we see going on for consumers with this long holiday weekend that we have in front of us. Even the choice beef cutout, although down a little bit relative to a week ago, there's some things there that really stick out to me. When you look at loins, for example, up $2.72 relative to a week ago, ribs up $6.88 relative to a week ago. It tells me we're moving some pretty significant volumes of product as a result of this Memorial Day weekend. So it's been very positive as we move into this long weekend. I do worry once we get out the other side what happens to demand as we move forward, and I hope we can keep demand as strong as we've seen of late.
We have a lot of good news this week. We talked a little bit about weather, and I would have to assume with rain and now some heat and some sunshine, the forage situation across the U.S. has to be looking pretty good for 2016.
Yeah, I think when you look at the latest information we can get from USDA, the percentage of hay and pasture in very poor condition is sitting there at about 8%. That's a very low level. So it looks to me like we've got a lot of forage available as we go through the remainder of 2016. I suppose a really dry situation could turn that pretty quickly, but we're in a much different position than we've been for a long time, and I think that will continue to probably allow us to build some cow herd that we otherwise might not have. So a pretty good situation from the pasture side of the equation.
Would there be enough left over from the 2015 forage season, or at least maybe in reserve or in stockpile, that if something did happen and we hit a drought situation in Texas, Nebraska, those areas, that there would be enough to recover at least from other parts of the country?
I think we have seen a lot of barns that have been filled with hay, again, that were empty following the 2012 drought. And so I do think there's an opportunity to move some hay around again that wouldn't have been the case as stocks have been replenished. So yes, we have that option, and I think you see that reflected in just lower hay prices as reported to USDA of late, that it's much easier to find excess hay available. So I think we're in a position to weather a dry event better. I think the bigger issue is if we get really dry and pastures get to where there's nothing left, a lot of folks won't want to feed hay too early in that fall season, and that might suggest some culling that otherwise wouldn't happen. But it's going to take a pretty substantial turnoff of water to make that happen, and that may have more impact on what we see on the crop side than the hay side from that standpoint.
Scott, speaking of crops, I would have to wonder, are livestock, I'm assuming livestock producers are watching corn and soybean prices pretty closely. We hit, 7-month highs today here on Friday in corn, and beans have been holding on as well this week.
Yeah, absolutely. If you look at soybean meal, for example, over the last couple of months, if you looked at a July soybean meal future, we've gained about $40 a ton. Corn has done similar things. A July futures up about 50 cents relative to where we would have started once we got planting intentions. So those prices have been moving up. I sometimes will, equate when we look at the hog market in particular. The first quarter of 2016 was slightly positive. Yes, hog prices were higher than we thought, but feed costs were also lower. If you look at what we've been doing of late, if those trends continue, we may end up in a situation where the higher feed costs can't be offset by what we've been doing in hog prices, and that's a little more worrisome in terms of where we might set for probably more importantly third quarter and fourth quarter hog returns. $4 corn and plus $400 soybean meal is in fact changing the bottom line of all the livestock sectors at this point.
Scott, real quick, looking ahead to next week, does the market react a little bit different when we see a shortened week by a holiday like we will with Monday and it being closed?
I think we will see a little bit of different reaction, and I think most important, a lot of folks are now going to say, all right, we're past that Memorial Day weekend. What's really happening on the demand side? And we might get a pause in the action. We might see a little more negative move in prices if folks are worried about where demand goes post that Memorial Day holiday. And some may be worried that, for example, we've already hit seasonal highs for hog prices and maybe we've done that early as a result of the long weekend. So I think we're going to take a little bit of restock of the situation when we look at where markets move next week. I hope we get positive news and people see additional demand coming. I will say when you start to look at some of the export side, maybe a little more positive news coming there, and hopefully next week that'll continue to unfold as we see perhaps more pork moving into places like China and Korea, as well as more beef. We seem to be getting a little more optimistic on the amount of beef we can move out of this country, all of which gets us perhaps a little more positive for the remainder of 16.
All right, Scott, we will see you next Friday.
Thanks very much, Megan.
I'm Meghan Grebner for Brownfield.